Hey guys, welcome back. I'm Caitlin McKegg, a Phoenix real estate broker. I'm here with your Monday market update. I'm feeling a lot better from last week, so thanks for all the tips of having some tea with honey. I definitely did that last week and helped my voice. So I think today's gonna be a little bit easier to get through this update. So if it's your first time here, make sure you subscribe, hit the bell for notifications. I'm here every Monday giving you an update on what's going on in the Phoenix real estate market, and it has been exciting lately because things have been changing. I don't have to sit here and talk about how intense the seller's market is anymore. So I have a lot of great stuff to go through with you guys today. Before we jump into that, I just want to say thank you to the Cromford report. They are a source of a lot of excellent information that I share with all of you, and I am a subscriber to them. And also I have created, or at least showed, the sources on most of the other information that I get, as well as just experience of me being out in the field. So without further ado, let's jump in and start talking about what's going on in the Phoenix real estate market. So starting with affordability. Now, this is not new news. I've talked about this quite a bit in other videos and some of my YouTube shorts. And this is an article that I saw recently, which is looking at the nation as a whole, not just Phoenix, but it did specifically call out Phoenix. And I thought this was pretty striking. So today they are saying that you have to make at least $87,026 per year as a household income to be able to afford the median home price in Phoenix. And that sounds pretty high to me, but here's what's crazier is that is a $27,302 increase from what that number was last year. So my question is, have you gotten a raise of $27,000 in the last year? Highly doubtful. Most people do not get increases of that much in their salary year over year. So, no surprise, but home prices have really outpaced wage growth in Phoenix, and this is really showing us that with these numbers. It's a 46% increase in the salary that you needed from last year to this year to qualify for the median home price, and wages in Phoenix only grew 6.4% in the last year. So again, not surprising since we've carried through this market and watched what's going on, but disappointing for sure, in my opinion. Now this graph down here is showing the percentage increase in income required to purchase a home and median home price in various metro areas. So you can see where Phoenix is. We're in that number 4 spot there with those numbers I just mentioned, but look at Tampa. Their median price is less than ours, but they've had a 47% increase in the income required to purchase that median priced home. Some places on here that I was surprised about, like Northwest Arkansas. There was another one on here that I thought was interesting. Richmond maybe, Des Moines, but looking at all of these, Phoenix isn't the only one, but we are up here kind of towards the top, of course, getting that publicity. What's interesting is Tampa just beat us out on the Case-Shiller Home Price Index as taking the number 1 spot for the most home price appreciation. Phoenix has been in the number 1 spot for 33 consecutive months, and we just lost that title to Tampa. So here they are coming up on this survey as well, talking about the wage growth or lack thereof as compared to the home price growth. So, again, no surprise. We know affordability is kind of going out the window in a lot of places, but I thought this was interesting to really break down those numbers. So let's talk about our demand and mortgage rates. This headline has been everywhere this past week from many different sources, but mortgage demands dropped to the lowest levels in 22 years. Our purchase loan applications were down 7% from last week. This is just showing the continual decrease. And down, I believe this was, oh gosh, why am I forgetting this number? Down 21%. Let me just double check. hold on. See, this is the problem. When I write these things out, I try to, make it surprising for you guys and be interactive, and this is what happens. I was right, 21%. Down 21% from the same time last year. Refinance requests are down 75% from last year, which is not a surprise with where rates have been going. As of last week, the average rate 30-year fixed is 5.4%, up from 5.3 the week before. No,
There's
Siri.
nothing to read.
Oh my. Okay, we're just all over the place today. Again, this isn't super surprising, just seeing where rates have been going. But again, to look at the numbers, there's just not a lot of activity going on in mortgages. And that means that we have low buyer activity, which is really affecting our market, which I'm going to get into in a second. So, of course, we're going to not really see anyone interested in refinancing right now. If you missed the boat when the rates were at 2.99, I'm really sorry, but more than likely it doesn't make sense for you to refinance right now, maybe in the future, but this is where we're standing with interest rates. So let's talk about our local market and some demand. So active listings are up. We are this greenish, yellowish line right there. Active listings are spiking up. I've been talking about that for a month or 2 months now. And it just continues to happen. So right now, buyers are seeing an increase of 800 to 900 new listings coming on the market per week. So how the tables have turned, right? As a buyer, this is getting pretty exciting. You got choices. You may be the only offer on the table. You might see days on market at 7 to 10 days on market, and the house still doesn't have an offer, but you really like it. I mean, these are really exciting times that we've not seen in 2 years. So, if you're a buyer that's been on the fence, or you plan to buy and then things were just really too tough for you in the spring, now might be your shining moment. It's about time. Now rates are not where they used to be. Affordability is not where it used to be. And, there's a lot of uncertainty. So it's got to make sense for you. But if you've been waiting, I mean, you kind of have a nice little opportunity now. Market balance. So the latest update from the Cromford report was asking the question, are we going to be in a balanced market by mid-August? And it very well could be true. With the rate that these listings are going, if they keep going up, we're going to have an opportunity to be in a balanced market because we'll have lower demand and more supply. And I'll go through the difference between that in a second on the next slide. But Cromford doesn't usually predict anything, and they don't like to give timelines and deadlines and that kind of thing. But they're asking the question, is this where we're headed? Because if things continue, that's where we're going to be. Interesting stuff. Let's look at the changes that have happened since March 11th. So, you guys, I was thinking about this, and because I have a few listings right now that are on the market and it's quiet. And it would not have been this way like 2 months ago, right? It's like the blink of an eye. In the last 2 months, in my opinion, the market has changed so much. So much has changed in the last 2 months that it feels like it's been a year. Like what could have happened in a year's time happened in the last 2 months. That's what I'm trying to say. And it happened just so fast that, I think a lot of us kind of missed it happening. Even though we were talking about it, you just still were so used to what was happening before that you couldn't even fathom how it could change this quickly. And so when we talk about where we were at March 11th to today, normally, you're not going to see a big change, but we are seeing a huge change between March 11th till June. So our active listings are up 138%. And that is, the numbers there are 4,820 back in March to 11,471 today. Big change, big change. And then you add into that buyers falling off and not being interested in these 11,000 listings. that is like screeching brakes. That is like dousing the market with a cold bucket of water. That is how things feel. Single family homes, so out of all of these listings increasing, single family homes are up the most at 148% since March. Condos and townhomes are up 139%. Now in the price range of 400,000 to a million, we've seen an increase of 183%. And in the 1 million to 2 million range, an increase of 163%. So all over the map, we're seeing an increase in active listings. Doesn't matter if it's single family homes, condos, townhomes, what price range, all together we are seeing this big increase of listings. So great news for you if you're a buyer. If you're a seller, we're still in a strong seller's market. I'm going to talk about that in a second, but you have lost leverage because you have so much competition on the table now. I mean, look at these numbers here. You've doubled your competition, more than doubled your competition of other homes on the market. So that's certainly having an effect on our days on market metric, our number of list price reductions happening on a weekly basis, and things are just different now, and that happened very quickly. So let's talk about the CMI. If you're new here, the Cromford Market Index is an index that they have come up with using data from the MLS, and it really tells us what our supply and demand factors are like in the market. And if this index is anywhere between 90 to 110, it means that we are in a balanced market. Anything above 110 is a seller's market, below 90 is a buyer's market. So we are above 110, 237.5. Mind you, that was in the 400s not that long ago. You can see it right here. That's where we were at back in March, and then we've just plummeted. So no longer are we in the 400s on that CMI, but that's okay. We're still in a really strong seller's market. Like I said, anything over 110, seller's market, but it is decreasing day by day. So here is our demand at 93.3. That is about 7% below normal. But like I said, anything between 90 to 110 is still considered normal. So, you know, we're falling out of that normal range. I think we'll be out of that normal range as we just talked about those rate increases and what's coming up in the future. I don't think that's going to help the demand situation that we have, but we're still kind of in that normal range at 93. Our supply continues to creep up. It's crazy, 39.3. So with that, we're about 60% below normal. So we're still undersupplied in the Phoenix area, but this has changed so much because back in March, this number was like around 20 or so. So 39.3 is again doubling where we're at with our supply. So when you have a situation where your supply is going up, your demand is going down, supply and demand are coming closer together. Once they meet, we have a balanced market. So that's where we're headed right now. The market index has dropped another, when we look at month over month, I believe it was 34 points in the last month. And last week, the month over month number was 33, a drop of 33. So it's still accelerating, and it seems like it will continue to do so. Here I added this graph down here for visual so that you can see, you know, where we're going and also see where we were at back in 2021, which is the blue line. So, you know, all of 2021, we were much higher than where we're at today. And then back in 2020, again, we were higher except for right here, which was the beginning of the pandemic where everything kind of froze. But this is certainly a big question mark on where we're headed. So if we go to balance, that means we'll come all the way down here somewhere. Or, you know, things could just kind of soften and we could coast here, and that's okay too. It's anyone's guess where we're headed, but for right now, the Cromford report is begging that question of, is this going to be balanced by mid-August? And for how quickly this line goes down, to me, that seems pretty realistic. If we just continue on the same trend we've been on over the next month or so, we'll probably start to see that. So that's all I've got for you guys today. If you are thinking about buying or selling real estate, keep in mind, I can help you with that. I work with both buyers and sellers. If you've been interested in selling your home and just wondering what you could get for it, I have a link in the description that will give you an instant home valuation, so you could check that out. If you're a buyer, I also have a link to search my MLS for homes for sale, or you guys are welcome to reach out to me anytime by call, text, or email. So I hope all this data is helpful for you. I appreciate all of you guys watching every Monday. Make sure you subscribe. Make sure you're back next Monday because I'll have another update. And throughout the week, I post other videos that are related to the Phoenix real estate market as well. So make sure to keep on top of those. Thanks for joining me, you guys. I'm Caitlin McKegg with the Desert Dreamers team at HomeSmart.